Hello everybody, welcome to our special edition coverage of Financial Crisis 2020, which certainly looks like it has begun. Collapse in oil prices, collapse in markets, collapse in almost every stock except staples like Walmart. The price of gold is holding up well. Cannabis stocks have collapsed. And so we thought that some coverage as to what is driving this collapse and what you can do to protect yourself against complete financial decimation might be of interest. So we're going to start with a quick look here at the FANG stocks. And as you can see at the beginning of the day, all of the S&P 500 engine stocks, as I like to call them, are in a state of more or less collapse, down 3, 4, 5, 6, and 7%, depending. There's been some bounce back. Walmart, if we look over here at the lower right chart, has certainly demonstrated some resilience relative to the other stocks of the rest of the day. It's actually above where it closed on last week. And so Walmart. Now let's talk about why is Walmart doing well? Well, obviously, should the worst case scenario ensue where the food production and distribution system suddenly becomes compromised and the bank system is interrupted to the point where you can't easily get your hands on money, well, that's obviously going to be a driving factor in Walmart, where big supplies of lots of food that people are going to want to stock up on, dry goods, bulk items. Walmart is obviously going to be the beneficiary of that. Compare that to Amazon here next door in the middle of the lower range of charts. Amazon, being not so much a discount retailer, is not been able to recover. Although, wait a sec, here we're on the 9-day look. Let's drop this to the 1-month look. Although, yeah, Walmart has started to bounce back too. So again, Walmart doing well because it is in a position to deliver food as things deteriorate. Now, the main driving force of the collapse in prices across equities globally is obviously the coronavirus. Let's take a quick look at South China Morning Post live coronavirus chart. You can see that at this point there's 110,000 cases worldwide, 3,867 deaths, 62,000 have recovered. So, you got to ask yourself, why is the market reacting if the death sort of rate remains so low? And I think what you can pretty much interpret from what the market is telling you as a result of trading today is that the expectation for a very much diminished GDP on the part of corporate reporters in the next few quarters is obviously going to be negatively impacted by the lack of travel, lack of transportation. There's going to be a slowdown in the consumption of commodities like oil. And so all of these things combine to pull the whole general outlook for GDP globally to the downside. So we're going to keep watching what's going on here today. Let's take a look at our gold charts here. So here's the real-time spot price of gold, $1,671, pretty much what it opened at, but higher than where it closed last week. Closed at $1,637, now trading at $1,670, relative to the S&P, which is right now at $2,782. Okay, and then like silver is down just slightly, not doing quite as well as gold, though tracking closely to gold. Palladium, which we've been watching lately, is down to $24.94. It took a hit from $2,800 back at the beginning of the month, but that was not necessarily palladium, or rather coronavirus related. The Van Eck Vectors ETF Gold Trust is down a bit, but again, that thing performs usually at the open and at the close. So if we look at the cannabis stocks here, where's our cannabis stocks? One moment. Trading view, charts, cannabis. Now this is the real ugly, here's the real ugly scenario. Cannabis stocks, well, there's gold, $16.69, but Aurora down to $1.22 last. Let's see here. There's the 9th. Let's go down to the 5-minute look, and we'll pull back to the 5-day look. Okay, so there you have it. Cannabis collapsed right at the beginning, but coming back now. Kronos Group, much the same. Everything took a dive and now recovering slightly. Here's Hexo, went as low as $1.18, now bouncing back. So you've got to think that the President's Working Group on Capital Markets, who is responsible for injecting liquidity into the markets during times of severe downturn like this, are hard at it, and thus the recovery. And the idea being that optically, if there is a return, or if the market closes or appears to be less volatile in its recovery as a result of capital injections by President's Working Group on Financial Markets, that the panic that drives markets lower when things collapse will be at least a little bit ameliorated, and people will take a calm breath. That seems to be what the case is now. We'll be back in 1 hour with another look at what's happening, and so join us then.